A warm welcome to the new year 2026, even as the markets are closed for the holidays around the world. I am Bosin Omofaye on the Arise Exchange. Now, Nigeria's Central Bank Governor Olayemi Cardoso outlined 6 strategic priorities that would guide the operations of the financial regulator in the new year 2026 that starts on Thursday. Those priorities were contained in the CBN Governor's 14-page 2025 year-end address made to the community of executives of banks and other financial institutions, as well as other business leaders at the CIBN dinner held on November 28. Here are the highlights.
Fitch upgraded Nigeria from B- to B stable, recognizing our commitment to orthodox policies, including FX reform, monetary tightening, and ending deficit monetization. Moody's also raised its rating from Caa1 to B3 in May, citing improved fundamentals and a stronger outlook. And just this November, S&P affirmed B- and B and revised its outlook to positive, underscoring sustained reform momentum, rising reserves, and enhanced macroeconomic resilience. Ladies and gentlemen, this evening, Moody's concluded its periodic review, and while headlines may highlight risks as rating agencies are mandated to do, the substance of the report reaffirms ongoing improvements, including strong fiscal matrices and deeper diversification. These nuances matter, and this is precisely why we must continue to tell our own story clearly, consistently, and confidently. Nigeria's model implied scores are trending upwards, and as reforms deepen and data continues to validate progress, these legacy qualitative reservations will diminish, paving a clearer path to future upgrades. These endorsements of Nigeria's policy direction have translated directly into improved borrowing terms, increased investment inflows, and enhanced credibility. Underscoring this progress, Nigeria this month successfully raised $2.35 billion through a Eurobond issuance, attracting $13 billion in orders, the largest in the nation's history. Banking sector health. Nigeria's banking system remains fundamentally strong and resilient, a cornerstone of our financial stability. At the same time, we remain vigilant to emerging risks, including cyber threats, credit concentration pressures, and operational vulnerabilities. These are being addressed through strengthening risk-based supervision and our ongoing transition to Basel III, which will further bolster resilience, improve capital quality, and strengthen liquidity monitoring. With just over 4 months to the conclusion of the recapitalization exercise, I am pleased to report that the process is firmly on track. Several banks have already met the new capital thresholds, while others are advancing steadily and are well positioned to comfortably meet the March 31st, 2026 deadline. To date, 27 banks have raised capital through public offers and rights issues, and 16 have already met or exceeded the new requirements. This is a clear testament to the depth, resilience, and capacity of Nigeria's banking sector. As we strengthen the capacity of our banks, stress testing this year confirms that Nigeria's banking sector remains fundamentally robust. Key financial soundness indicators overwhelmingly satisfied prudential benchmarks during the year. We are reinforcing operational discipline to ensure the financial system serves all Nigerians reliably. Our starting point was a comprehensive end-to-end review of the entire cash cycle, from production to transportation to distribution and eventual access by consumers. This holistic assessment enabled us to address root causes rather than symptoms. As a result, we recalibrated our cash printing models, issued guidelines on the optimal ATM to card ratio, strengthened requirements for CBN approval before ATM or branch closures, enforced sanctions on banks whose ATMs fail to dispense cash, and intensified supervision of payment agents and POS operations nationwide. Our decisive actions on regulatory forbearance mark another turning point as recapitalization. I beg your pardon, forbearance marks another turning point. As recapitalization progresses, we are redesigning the credit risk framework to enforce stronger governance, greater transparency, and firmer accountability across the sector. We are determined to break the boom and bust cycle that has accompanied past recapitalization efforts. MSMEs remain central to our efforts. This year alone, microfinance lending expanded by over 14%, and new digital credit products reached more than 1.2 million small enterprises, evidence of the sector's growing depth and capacity. We are improving access to credit, supporting microfinance institutions, and expanding financial products tailored to smaller enterprises. Payment system modernization and digital finance. Nigeria's digital finance transformation accelerated in 2025, reflecting our twin priorities of fostering innovation while safeguarding stability across the payments ecosystem. Earlier this year, we extended our payment system vision roadmap to 2028, an ambitious commitment to modernize payments infrastructure and strengthen cybersecurity. More than 12 million contactless payment cards are now in circulation. Our regulatory sandbox has expanded to over 40 fintech innovators, enabling safe experimentation and responsible scaling of new digital finance solutions. Revised agent banking guidelines have tightened anti-money laundering controls, including geofencing of high-risk areas, while improving consumer protection at the last mile. Integration across switching companies has improved, bringing Nigeria close to seamless domestic interoperability. Supported by these measures, Nigeria today stands amongst Africa's most advanced digital payments markets with a dynamic fintech ecosystem. That has produced 8 of the continent's 9 unicorns. By mid-2025, leading fintech apps had surpassed 10 million downloads each, with one particular one surpassing 50 million downloads, reflecting deep consumer adoption. In parallel, our engagement with the global fintech community has been a further significant supportive mechanism. The strategic fintech dialogue at the IMF 4 meetings brought together policymakers, innovators, and investors, culminating in a consultative report that will guide Nigeria's next phase of fintech evolution. As digital assets, tokenization, and stable coins become critical topics for central banks worldwide, our stance remains clear. We will lead thoughtfully with discipline and clarity of purpose. Innovation must proceed responsibly, anchored in consumer protection and financial stability. FATF Grey List exit, restoring confidence. One of the most significant achievements this year was Nigeria's exit from the Financial Action Task Force, FATF. This milestone was the result of a coordinated national effort led by the federal government, with critical contributions from the Central Bank of Nigeria, the Ministry of Justice, the NFIU, the EFCC, and our regional partners. Through stronger supervision, improved reporting standards, enhanced intelligence sharing, and governance tools such as EFMS and the FX Code, we addressed the deficiencies identified by FATF during its on-site assessment. Nigeria's grey listing carried a significant cost. Countries in this category typically experience a 7.6% of GDP drop in capital inflows. In the first year for Nigeria, that translates to more than US $30 billion in potential investments. Exiting the list, therefore, signals a major restoration of confidence and eases compliance frictions for correspondent banks. The global financial community has welcomed Nigeria's exit, noting improved access to international finance and smoother cross-border payments. Financial inclusion and expanding participation. Financial inclusion continues to deepen. At 74%, the share of adults with access to formal financial services is approaching the global average. More than 3 million agent bankers now serve communities nationwide. Inclusion, however, must go beyond account ownership. It must translate into meaningful economic participation. To this end, we launched a Women's Financial Inclusion Dashboard, a Women Entrepreneurs Finance Code, and an Inclusion Roadmap for Displaced Persons. Initiatives designed to ensure underserved groups can access and use financial services. Digital wallets, mobile money platforms, and fintech-enabled microcredit solutions continue to expand options for household and MSMEs. Strengthening trust through transparency and thought leadership. Thought is the backbone of any financial system, and it is built through transparency, consistency, and sustained engagement, principles that guide our relationship with the CIBN and the broader financial community. This year, we expanded our external engagements and thought leadership initiatives to rebuild credibility, elevate Nigerians' presence in global economic discourse, and reinforce confidence in our reform trajectory. For example, in New York, we presented Nigeria's reform story at the NASDAQ market site in Times Square, sharing the stage with a Nobel Prize-winning economist and leading global emerging markets investors. We directly engaged key institutions and Nigerians in the diaspora. At universities, the Lagos Business School and the London Business School, for example, we met with young Nigerians alongside policymakers, business leaders, investors, and members of our diaspora community, deepening understanding of our monetary reforms and building trust across generations and constituencies. Fiscal-monetary coordination, and this was something that was so eloquently spoken about earlier by my dear friend, the MD of UBA. Monetary reform cannot be effective in a vacuum. Alignment with fiscal policy has strengthened Nigeria's macro stability and yielded tangible results, including reduced domestic borrowing costs, improved liquidity conditions, and more predictable fiscal operations. To the Treasury Single Account TSA to strengthen revenue mobilization and public financial management. As we transition towards a full-fledged inflation targeting framework, this partnership will deepen, ensuring fiscal and monetary policies reinforce each other in delivering durable price stability. Compliance, digitalization, and operational effectiveness. Digitalization, as we all know, is reshaping the global financial system, and the central bank is preparing deliberately for this future. In 2025, we established a dedicated compliance department, now fully operational, with mandates covering financial crime supervision, market conduct, enterprise security, corporate governance, and ESG. We also accelerated our internal digital transformation, deploying AI-enabled tools to enhance productivity and rolling out DocFlow, our digital records management system, to strengthen efficiency and transparency. Capacity building is now a core pillar of our reforms. Our people are undergoing targeted training in AI, blockchain, digital assets, and data governance frameworks, ensuring that the bank develops the technical depth to regulate an increasingly complex financial landscape. We are, at the same time, improving how we serve this market, streamlining licensing processes, accelerating approvals, reducing bottlenecks, and issuing clearer, more consistent circulars. As we look towards 2026, our strategic priorities are clear and actionable. 1, strengthening the banking system, safeguarding stability, protect depositors, and support credit growth through rigorous supervision and strong governance. 2, delivering durable price stability, refine our inflation targeting framework, and deploy advanced analytics to anchor expectations and lower inflation sustainably. 3, modernizing payments and promoting financial inclusion, expand contactless payments, and strengthen digital rails. 4, fostering responsible fintech innovation, support fintech expansion while protecting consumers, strengthening cybersecurity, and safeguarding financial integrity. This includes enhanced data governance standards, stricter licensing requirements, and clearer guardrails for digital asset experimentation. 5, building institutional capacity and efficiency, strengthen staff skills, streamline processes, and reduce bottlenecks in licenses and approvals to support a more agile, responsive central bank. 6, deepening partnerships and thought leadership. Collaborate with regulators, industry stakeholders, and international partners to reinforce Nigeria's position as a trusted and respected central bank. These priorities are not abstract aspirations. They are practical, measurable, and fully aligned with our mandate to safeguard monetary and financial stability. And ladies and gentlemen, similar to what I did last year, hopefully I'll be back here next year. Hold me to account. In conclusion, you said you wanted the longer version. Distinguished guests, the foundation for a revitalized Nigeria has been laid, but the journey is far from complete. The progress we have achieved reflects partnership, discipline, and the courage to pursue necessary reforms. It demonstrates that when we unite behind difficult choices, Nigeria can chart a new economic course, one defined by stability, innovation, opportunity, and shared prosperity. This year's actions include the deployment of the electronic forex market surveillance system, the shift to a single market-determined foreign exchange rate regime, and enhanced risk-based banking supervision underscore our track record of reform delivery. They have strengthened Nigeria's capacity to absorb external shocks from volatile oil prices to shifts in credit rating sentiment. With oil now a smaller share of GDP and fiscal revenue, a sharp oil price decline will be cushioned by the flexible FX regime, rising non-oil exports, and growing services trade. In short, Nigeria is more resilient to external shocks today than at any point in our recent history. My promise to you is that the Central Bank of Nigeria will continue to steer monetary policy with discipline, anchored firmly to its core mandate of price stability. Stability remains the bedrock upon which investment flourishes. Resources are allocated efficiently and purchasing power is protected. In 2026, we will deepen engagement with stakeholders, strengthen collaboration with other regulators and international partners, and foster responsible innovation across the financial system. We will continue to provide forward guidance, protect the integrity of our financial markets, leverage technology and AI to improve decision-making, and build institutional capacity to support an evolving and resilient financial system. By remaining disciplined, forward-looking, and true to our mandate, we will ensure that Nigeria's economy remains stable, inclusive, and primed for sustainable growth.
That's Olayemi Cardoso, the governor of the Central Bank, RTCIB, and final the presentation for 2025, giving outlook into 2026. We will drill down into the Central Bank's macroeconomic outlook for 2026 when the markets are reopened from tomorrow, Friday, January the 2nd. And that's your Rice Exchange for tonight. Do have yourself a pleasant holiday evening. I am Bosin Nomafaye. Bye for now.